From the offices of MrTopStep.com, this is Danny Riley with today's midday update. The name of today's video is going to be S&P 500 futures, the Thanksgiving rip, and the best 6 months for stocks. I want to remind everyone that these are not our father's markets or charts, and in no way, shape, or form are they going back to what they used to be. We'll leave it like that. The high of the day in the S&P came in at 21.95 quarter. That's a new contract high recently. The low came in at 21.8475 early, and last were 21.9275. We're up 12 handles on the day. Total volume, we've got 880,000 minis traded and 300 big S&Ps traded in the pit. Let's see. Now, the MEM is showing 132 million to buy. Tomorrow, or the rest of the week, has a total of 15 economic releases, with Wednesday being your big day. They've got a lot of releases that day. And then the exchange is closed on Thursday, and then closed for a half a day on Friday. I think the S&Ps close at 12:15 Central Time. The bonds, the currencies, and everything else close at 12 o'clock. Now, what's going on here? What's going on here is people are getting squeezed out of the market. And after this big decline that we had on the election evening, I still think that the markets are just playing out this Donald Trump election win. But it's more than that. Part of it is the seasonalities that occur when you go into Thanksgiving with the Dow up about an average of 1%. And the other part about this is the best 6 months for stocks. So, is it really Donald Trump? I don't think so. I think really more the first two things that I mentioned, and all the buy stops in the S&P that have been sitting above the old contract high. Once we got up toward these like 88, 87, 88, that's where this big line of buy stops came in. I put them out on the Twitter today at 21.8870 up to 21.8870 up to 21.9697, and we've got a 95 quarter high. Look, volumes are going to drop this week, and what that creates is a thin to win environment during the holidays. Now, one of the rules that we pay attention to during the holiday week is that the statistics that show the Dow up an average of 1%. And today, right now, we've got the Dow up about 0.75%. So you're looking at most of the week's gain. You're looking at most of the week's statistical gains in one day. But that said, I don't think it's over. I know Trader Dave was talking about maybe, on a big pop above 2,200, buying some puts and then looking for a 30-handle retracement. But at the end of the day, I got to go back to these basic trading rules. And one that I always talk about is the trend is your friend. And when you've got these kind of seasonalities around, and I did try to short it this morning, I had a 5-handle winner or 6-handle winner on one trade, didn't take it, end up making $1 or one handle on the trade. And in reality, what I should have been doing is when I was trying to cover that short this morning, I should have been looking for a long, because I saw the lows of the day. I saw how they acted. I wasn't meeting my downside objective. And you know what the thing is about this? When you think you know more than the markets, you get shafted. And I got shafted. So, look, I guess the question is, and it remains to be the question, has the S&P gone too far, too fast? Well, I think we all would have agreed that it has, but at the end of the day, it's not stopping. And again, I think it's got to go back to that same thing about the seasonalities and the trend being your friend. To tell you what I think is going to happen here in the next couple of days is we will get a little bit of pullback, and we'll get a little bit of back and fill, and then we're going to run them up to 2,200 and above. That's just I don't think that there's any way that that's not going to happen this week. Now, let me see. And then the last part, I want to talk about this real quick. I'm not quite sure I understand, and again, I want to emphasize this. I'm not really for or against Donald Trump, and I'm not really for or against Hillary Clinton. But the public has spoken. He won the election. He won the electoral vote, and that's how this game is played. So at the end of the day, while Hillary Clinton may have gotten more votes, she didn't win the electoral. And until that process changes, it's the way the game is played. And again, I want to reemphasize something, that I'm not trying to dog anybody that doesn't like Donald Trump, but at the end of the day, the election was a couple weeks ago. And it's not going to change. He's taking over the White House, whether I like it or whether you like it or not. And I think all this bashing and continued bashing on Twitter, on Facebook, and all this stupid stuff is just that. It's very stupid stuff. I think at the end of the day, just like anything in life, people need to move on, and yet they don't want to move on. But that said, there's a lot of back and forth about whether Donald Trump has anything to do with this election. And I think he does. I think he does. All the implementation of these new programs, new trade deals, the big program for rebuilding America, infrastructure program, it's all going to be bullish. Does that mean that the S&P is going to go straight up? No. And again, I want to reiterate something that I think that in 2017, we are going to get a very big correction. Hold on. So anyways, I'm sorry about that. And then the last part about this, look, you guys, I want to do more videos. I want to get out to you. I want to reach out to you. But at the end of the day, this thing with trading and trying to make money and all this sea of algorithmic programs and sea of algorithmic headline news, it's not easy. And I'll be honest about it. I had a good run a couple of weeks ago. Then I got caught up in all this melee when the markets were moving all over the place. And I did this to myself. I lost a bunch of money, and not a bunch, I mean, nothing that I can't make back, but it's discouraging. You work, you make profits, and then bam. I think that's the way the game is played. And if it's not played that way, I'd like someone else to explain it to me. And if you agree, please do a shout out on the YouTube page. I want to know what you guys are thinking. To summarize this, I think that the S&P is going to continue to go up in the latter parts of today, the afternoon today. I think that we need some type of sideways to down day, and then into Wednesday, and then into bullish Wednesday and Friday. So at the end of the day, I don't think it's over yet. S&P 2200, yes. S&P 2200 above, yes, I think so. Is it going to happen right now, exactly while we're talking? No, I doubt that. But at the end of the day, the markets are pushing higher. And what I've always tried to say is we're not here to fight City Hall. You don't want to fight the tape when it's like this. Go with it. And I need to do the same thing. I need to take my own advice. I'm going to leave it like that, my fellow traders. I am here, but I got to admit, this isn't any easy trip that we've been going through. And I think a lot of traders will agree with that certain days they make, certain days they lose, and you just got to control those days when those losses amount and get out quick, and that way you can preserve your profits and your capital. We'll leave it like that, traders. I'll see you tomorrow on the final 45.